Insight, we're now joined by our featured guest of the morning. He's Patrick Horan, principal at Agilith Capital. Patrick, always great to have you with us. Love to get your thoughts on today's numbers. We don't have the numbers in our hand yet, but I know in some recent commentary you said that that at Agilith you believe the hotter than expected employment numbers are something of an anomaly.
That's right. That's right. We think there's some seasonal effects. We had a warmer than usual winter. We do have a trumped up consumer, and I think the companies were responding with a lot of employment to actually fulfill all the demands over Christmas, and which is a major purchasing time in the year. And we think those were they added to some anomalies in the quarter or in the month, and we saw a hotter than normal jobs picture, and got a false sense that inflation may not be taming. It actually may be reaccelerating.
That's not the view you have. You don't think that these job numbers are emblematic of a very stubborn inflation picture.
That's right. That's right. We believe that the underlying economy is cooling down, and for good reasons. We've taken away all of the the octane, the sugar in the economy. Money supply is going down, and capital has been slow to form. And we think that's having an effect on businesses and expectations. I think there is still some areas in the economy that are still seeking employment, and these parts were starved because of COVID. So travel and leisure is probably your poster boy for that. They're still looking for people. They still need to get back, and we can see shortages every day when you hear about airline delays. But those are that's a very, very small part of the overall economy. We think there's other areas that have been in excess because of very cheap capital and a presumption that stay at home was going to last forever. And that's the tech side, and so we've got the two polars sort of dictating the narrative in this jobs picture. And but when you really look underneath, we believe it's just a normal transitioning from a strong hand to a weak hand, and this is going to play out. This is going to normalize really over the year.
When the last time we got jobs numbers, it was a number of more than 500,000 jobs created in the month of January in the U.S. And that, of course, ignited fears that I think are still with U.S. investors and maybe many Canadian investors as well, that was a sign that more rather than fewer rate hikes from the U.S. Fed lie ahead in order to tame inflation. Why do you believe that's not the case?
Well, I think one data point does not make a trend, first of all, and that was certainly an outlier. I think when you look into how that employment number was calculated, there are a lot of seasonal effects that go into a computation. It's somewhat complicated in terms of getting your base number, but and it's very prone to error. So we look at it and go, it didn't seem right to us. And in markets, the markets love to go. They're a bipolar machine. They love to play on one side and then push hard, and then they'll play on the other side. And that's what that's how the technicians call a range, and that's what we believe we're in right now is a range. It's neither, and we've gone from trending down and pivot all the way back up to, oh my God, the Fed is lost control, and they're behind the curve again. So our strategy is always never to take either polar, take the middle ground, but I think for good reason, because I do think there was some. We had a milder than usual winter. We had a lot of supply shortages that companies were still trying to meet with, just throwing employment into it. And we think that's going to wear down. I mean, really, if you look at overall inflation, I think that's really the concern with the market, is that hotter employment will lead to more inflation. When you actually look at the inflation numbers, the home equivalent rent number is coming down. It's coming down nicely, and will continue to come down for another 6 months. So we think wind is, and that is a very large component of overall CPI.